Tech companies Apple and Qualcomm both report earnings today after the closing bell. Joining us to preview those reports is the head of BlackRock's fundamental large cap growth equity team and lead portfolio manager for all fundamental large cap growth portfolios. He is Jeff Lindsey. Now keep in mind, a third of his fund, the BlackRock Appreciation Capital Fund, is U.S. tech stocks, with Apple and Qualcomm sitting in spots number 1 and 2. Jeff, by the way, oversees more than $12 billion in assets at BlackRock. Great to have you here.
Thank you. Nice to be here.
Nice top 10 list. It does read like kind of a who's who of tech America, if you will. Apple is we're expecting big things from earnings. What are you expecting in terms of today?
Well, we're expecting big things as well. Most importantly at this stage, we want to see that there's very strong demand for their products. So the number of iPhones, hopefully more than sort of 16 million. The number of iPads, more than 6 million for the quarter, are the main things. It's about the growth. Of course, we want to hear commentary about the impact of Japan. And if it's transitory, which would be my guess, then who really cares? This is about the future, not this quarter.
Well, you're talking about a huge overweight in technology, specifically Apple, but you're also, if you drill down to it, an overweight in not just technology, but a certain part of it, and that is to say mobile computing and wireless, with the likes of Apple and Qualcomm up there. So what does that say about it? I mean, you're overweight that much there. How much do you feel that this is going to ripple out to just beyond Apple to other wireless companies as well?
Right. So believe it or not, there are a lot more smartphones in the world than the iPhone, and the market share of the iPhone is actually quite small. So Qualcomm will sell to most of the other makers of smartphones. Mobility is a giant trend. People very simply want access to all their personal and data and business data, no matter where they are, 24 hours a day. It's a huge trend. It has implications not only for the phone makers or the device makers, but all the machinery in the background facilitating that.
Jeff, I want to come back to a story that we've been talking about this morning on Apple, that there's this suit. Apple sued Samsung over its patents, and out of that suit we learned some numbers on iPads that have been sold. And now there's this debate on whether or not the number of iPads they sold in this quarter is actually well below what analysts are expecting. Analysts are expecting they sold more than 6 million iPads during the quarter. Do you think we got a little taste of what might not be happening this quarter, or do you think they're going to have a very strong iPad quarter?
I think it's going to be a strong iPad quarter. The only direct sort of thing I worry about of sales within Japan. But again, whether I'm right or wrong about that, it's clearly similar to the iPod. It's such a high market share product, and we are expecting at some point other tablets to be successful. If it's Samsung and it's now, well, again, that's fine. Again, it's much more about the future, and we think that the tablet is going to be huge, and the iPad's going to have a huge market share.
Jeff, you talk about the future. We were just showing pictures of Steve Jobs, and just earlier this month we had a story about Steve releasing his first authorized biography. It's supposed to hit bookstores next year. So when I think about the future, I think about succession at Apple as well. I mean,
sure.
Do you expect at some point it's Tim Cook, and are you comfortable with Tim Cook in that position?
Sure. Well, first of all, I do think that the price of Apple stock reflects concerns about Steve Jobs' health. Tim Cook is the right person for the job. Steve Jobs is not one of those people you replace. It's just a necessity that somebody else takes the job. He's most deserving and very capable of it. And my colleagues have met him, and we have high confidence in him. And
you have confidence that the innovation will continue at Apple, no matter what?
No. Well, we'll have to see. I would say yes, but then again, I want to see it as well. I expect that Steve Jobs has already helped put together a product path that'll extend to some point in the future from here anyway.
We've been really focusing on your top 10 holdings. We talked about Apple. Jeff, that's number 1. Google, though, also in that list. this company's been doing so well, but we had Larry Page talking in his first earnings call. Were you kind of happy with what you got from Larry Page? Or didn't get because he got so little?
Well, he's clearly decided to be somewhat aggressive with the spending. Now, undoubtedly the opportunities for Google from here are still huge. So, he's adding some risk to the equation
but you
with the spending
to grow in the future, don't you?
Absolutely. That's right. So that's part of the game we play, investing in growth stocks. We got to make a judgment call whether we believe him and whether this ramped up spending is going to pay off or not. There's some show me to go here for sure.
And Carol gets to a good point. We're talking about Larry Page and Steve Jobs. These are big companies that don't make themselves widely available to shareholders like you, and yet you've got so much money in these few technology stocks. How can you make your decisions when management isn't always available?
Right. Well, so my choices are to own it or to not own it.
Right.
And if I sat around being afraid of what I'm not being told, I would never own these stocks. So, it's just it's a series of judgment calls on how comfortable we are with our own work, which is what, at BlackRock, that's what we do with our big resources. We find whatever resources we can to make our own determination when the company, if the company fed it to us, of course they're feeding it to everybody else at the same time. There's probably a better opportunity when the company doesn't communicate for people who do hard research.
Now, when you're talking about the overall valuation, not just technology, you're obviously comfortable with the valuations there, but how do you feel about the rest of the market? You're talking about growth stocks here, but is there a cause for concern right now? Do you think valuations are overstretched, or do you think this earnings season is going to provide more validation that things are okay and that everything's on track?
As far as this earnings season, I think we've had a very strong start today across many industries, and I do think it's going to be another strong quarter of earnings. And I don't want to, say that I'm not worried about anything. I think the price of oil is quite concerning, and I would like to see that come back down to be more comfortable with growth in general. But I think that the market is cheap. I think that growth as well is cheap. And so, it could be that people are surprised with the strength of the stock market despite, clearly important macro concerns, just because the starting point is still inexpensive.
And that's it. I mean, I was curious about, because you have so many tech holdings, in terms of valuations, you're comfortable with the valuations we're seeing in many cases throughout Silicon Valley? Or not so much?
I am comfortable with it. That's why it's a third of the portfolio. I hear, the bubble, the B word, bubble, and I think that, that's some kind of reference to newspaper articles about Facebook, which isn't even public yet, and maybe some other social networking potential IPOs. But hey, let's wait until their IPOs, and then we can say, are those in a bubble or not?
Would you like to be
the companies
investing in
we're
those
buying,
companies, though? I mean,
Oracle and Qualcomm, they're not expensive.
John brings up a good point. Would you invest in a Facebook?
At the right price, absolutely. It's a fabulous growth company, but I have to see what the price is. And I have to have more information than is out there as well.
What do you think about fund managers that seem to be already investing in companies like Facebook, even though they're not public?
That's the vehicle that they're able to do that with isn't applicable to all clients and all mutual funds, and so they've gone through their own process to determine if they like it. If you're asking me if I like Facebook at $65 billion, I need to do a little bit more work. That's a hefty valuation. It might be fine.
Joining us right now from Chicago, Brian Battle of Performance Trust Capital Partners. So, Brian, looks like we could regain all that lost ground from Monday today.
Yeah, Betty, we're higher. There was good trade in Asia and in Europe overnight. We are making up some lost ground. Volumes aren't that great, and you're right, it is a holiday week. So the trend has been higher, and with Intel doing better, we had good reports out of LG, and we had some chemical reports out of Asia that earnings are doing better. So it might look like it's not getting worse, and that's enough reason not to fight the tape. I don't know if you can be an investor here, you're going to be a trader, and you're just going to follow it higher, and I think we're just going to trade with that today.
Hey, guys, speaking of an uptrend, let's just just check out gold prices. I keep on looking at gold prices. Again, $1,501 right now. Record highs for gold. It just keeps on surging here. The question is, remember, there was a Goldman call not too long ago, guys, saying that commodities might be a little toppish near these levels. But we're watching gold right now, and guys, it doesn't seem like it's showing any end in sight here for silver, gold, or any of the other metals out there.
Carol, that's what I don't understand. People are still piling into gold and they're piling into stocks. I feel like we're getting two different messages there.
You know, that's a good point. Jeff Lindsey from BlackRock is here. I mean, Jeff, what is the message here when you see investors continuing to pile into gold, but equity markets up as well?
Well, I think that
Brian, hang on a second. I'm just going to ask it to Jeff Lindsey, who's here on set with us. Go ahead, Jeff.
Yeah. Okay. I think that everybody, not everybody, a lot of people believe that for some portion of their wealth, to put it in gold in kind of a just-in-case scenario makes some sense. And to the extent more and more people do that, gold can go up at the same time as other things that contradict it. I don't know if that's the right explanation or not. That's kind of how I think of it.
Brian was saying it feels like the trend just says keep on buying stocks. Do you feel like that? I mean, you own a lot of stocks that have had big moves already. Do you get uncomfortable with some of those big positions that have already had big moves?
Well, sure. I mean, it's my job to come in every day and worry about what happened yesterday and whether that can continue in the future. But, overall, as I said before, I think stocks are cheap and the trend is up. It's early and we're still recovering from recession. Things are getting better. We should be getting paid for the good earnings growth we're seeing this morning, and I think we'll see in the next couple weeks.
That's a good point. Hey, Brian, let me just bring you in for the last few seconds here. I mean, the earnings momentum, do you feel like the sentiment on the floor, traders want to buy here just quickly?
Yeah, I think it's momentum, exactly right. You can't be short this market. You got crushed the past couple of months, past 6 months. So you're going to follow the trend. It's going to be hard for investors, but as a trader, you just take it and you follow the trend higher.
Got to run. Brian Battle out there in Chicago. Thank you so much. Jeff Lindsey here from BlackRock. Thank you so much. We really appreciate it.